Good morning, Indonesia. Today we bring news that many across the country have been waiting for, especially those who have long dreamed of owning their own home. For those dreaming of owning their own home, there's finally good news. This week, mortgage rates have seen their biggest drop in a year. This drop brings a breath of fresh air, especially with the tough economy and rising property prices. After months of rising costs and discouraging news, this change could make home prices more affordable for many families. Now the dream of owning a home feels closer and more real, not just a faraway wish. Lower interest rates mean lower monthly payments, saving hundreds of thousands each month and millions of rupiah over the loan term. This isn't just about numbers. It's about feeling secure and having the chance to plan a better future for your family. This is a really important turning point, especially for first-time homebuyers and families who need a bigger place. Many who put off buying a home because they worried about high payments can now start thinking about their plans again. We'll talk about what happened, why it matters, and how it can affect your home buying journey. We'll also give you tips on how to make the most of this moment and what to consider before making a big decision. Stay with us as we discuss this promising change. Who knows? This might be the perfect time to make your dream of owning a home come true. Let's take a closer look at the numbers behind this big drop. Recent data shows a pretty surprising change in the housing market, and it directly affects millions of people thinking about buying a home. The average 30-year fixed mortgage rate dropped from 7.20% to 6.85% in just 1 week, the biggest drop in over a year. This drop isn't just numbers on paper. It's really making a difference for people looking to buy homes all over the country. Earlier this year, interest rates hit their highest point at 7.52%, making it hard for many people to own a home. Many families and individuals ended up putting off their home buying plans because the monthly payments were just too much. With interest rates dropping by more than 0.5%, the money you can save is huge. For example, for a mortgage at the national average value, this drop could mean saving millions of rupiah every year. This is definitely good news, especially for those who have been waiting a long time for the right moment to buy a home. For buyers, this drop in interest rates is like getting a big discount on the biggest purchase of your life. Not only are the monthly payments lighter, but the total cost you pay over the life of the mortgage is also much smaller. After months of rising interest rates and worries about home prices going up and up, this change is truly a breath of fresh air. Many people who were feeling down before are now starting to feel hopeful again about finding their dream home. This drop opens up new chances, especially for those who have been waiting on the sidelines all this time. Now the chance to own your own home is more real and affordable, but what exactly caused this big change? Let's dig deeper into the reasons why mortgage rates could drop so much in such a short time. The answer lies in the latest jobs report. The August report showed slower job growth and moderate wage increases, signs that the economy is starting to slow down. While it sounds like bad news, this is actually what the U.S. Central Bank wants to happen to control inflation. A slowing economy means less pressure on the central bank to keep raising interest rates. Investors now expect the central bank to either hold rates steady or even lower them sooner, which directly impacts mortgage rates. It's like a chain reaction. Economic data changes expectations, and interest rates respond. For homebuyers, this means loans become more affordable. Mortgage rates really follow what's happening with 10-year Treasury bonds. After the jobs report came out, investors quickly bought these bonds. This made their prices go up and their yields go down. When bond yields drop, mortgage rates usually follow right behind. Lenders were quick to pass these savings on to people looking for loans, causing rates to drop within just a few hours. The bond market acts like a bridge between economic news and your mortgage rates. This quick reaction gave a real and immediate benefit to homebuyers. That's why we saw such a big drop this week. Let's hear what an expert has to say about this. We spoke with Matt Graham, COO of Mortgage News Daily, an expert who has long observed the movements of financial markets and their impact on people's daily lives. Matt shared insights into how small changes in the global economic world can have a big impact on individual financial decisions, especially when it comes to buying a home. He explained that mortgage rates are not just numbers, but a reflection of the bond market's view of economic conditions and the central bank's policies. Any change in market expectations, whether due to new economic data or statements from central bank officials, can directly affect the interest rates offered to consumers. For the past few months, strong economic data, like job growth and consumer spending, made investors believe that the central bank would continue to tighten its monetary policy. This caused mortgage rates to rise, as the market expected borrowing costs to become more expensive. However, the August jobs report brought a surprise. The data showed a healthy slowdown in the labor market, indicating the economy is starting to cool without falling into a recession. This made investors start to consider the possibility that the central bank might not need to raise interest rates aggressively anymore. As Graham said, the market is now betting the central bank can hold interest rates, and that relief is flowing directly into mortgage rates. This means that a change in market sentiment can have a real and quick impact on home borrowing costs, which greatly affects buyer decisions. This isn't just a coincidence, it's a fundamental shift in market expectations. When expectations change, the market responds quickly, and interest rates can drop significantly in just a few days. For home buyers, paying attention to economic reports and understanding how that data affects interest rates is very important. By following these developments, you can pick a better time to make big decisions, like buying a home or getting a mortgage, so you can get a more favorable interest rate. Let's see what this means for your wallet. Let's say you buy a house for 4.5 billion rupiah with a 20% down payment, so the loan is 3.6 billion rupiah. At the peak interest rate of 7.52%, your monthly payment would be about 25.22 million rupiah. With today's 6.85% interest rate, it drops to 23.59 million rupiah. That's a savings of 1.63 million rupiah per month. Over a year, that's almost 20 million rupiah. Over 30 years, it's almost 590 million rupiah. For many people, these savings can make all the difference in whether they can get a loan or not. Even small changes in interest rates can have a big impact. Lower mortgage rates don't just help buyers. They also give a big push to the entire housing industry. Homebuilder stocks like D.R. Horton, Lennar, and Polta Group went up after the rate drop. Lower rates mean more people can afford to buy homes, which increases demand and sales for builders. Builders might not need to offer as many deals, which boosts their profits. A strong housing market helps create jobs and encourages spending across the whole economy. The stock market's reaction shows new confidence in the future of housing. This rate drop is a win-win for both buyers and builders. If you've been waiting to buy, now's the time to get ready. Look at your budget. Lower rates could mean you can afford more. Get pre-approved for a mortgage to show sellers you're serious. Ask your lender about locking in a rate today to protect against future increases. The market might get more competitive as more buyers come back, so work with an experienced agent. Don't rush. Buying a home is a big decision. Use the savings from lower rates, whether it's to upgrade your home or lighten your monthly payments. Go forward with confidence and a good plan. Will these low interest rates stick around? That depends on inflation and what the Federal Reserve does next. Keep an eye on upcoming consumer price index reports. If inflation keeps going down, rates could stay low or even drop more. But if inflation jumps up, interest rates could go up again. Watch for statements and meetings from the Federal Reserve. Their decisions directly affect mortgage rates. The market might stay a bit up and down, so if you find a home you love, locking in your interest rate now could be a smart move. Taking advantage of today's chances is a smart step for future homeowners.